Okay, everyone, welcome to another lesson. Congratulations once again. Well done for still watching these videos, doing the lessons. Hard work really does pay off. So let's get started. Today we're looking at a balance sheet for Ordette Limited. And it's for the financial year ended the 28th of February 2017. Whenever you're doing a financial statement, your year end is very important because it affects all your calculations. So when you're reading your question, always highlight the date, keep that in mind. And our question 1 is to calculate missing amounts in our fixed asset note. And 3.2 is just to calculate the balance sheet. Okay, so let's get started right away. We want to calculate all our missing amounts here in our fixed assets note. Number 1, can we get any information from this little block? No, we are only told fixed assets, carrying value, we don't know. There is no other information. Number 2, can we get information from our extra note? Our extra information? Yes, we can. So right here we have depreciation on vehicles information, we have more vehicles information, and we have equipment information. Very quickly, to right at the start, know where you're looking for calculations. So let's start. We need to calculate first A, which is the carrying value at the beginning of the financial year. We know that we had one addition and we know the carrying value at the end. So this is very important. And this is very easy too. So they are really not trying to see, if you know anything here. This is an easy 2 marks. They just want to see that hey, carrying value at the beginning plus additions give you this, which means if you want to calculate A, you have to work backwards. You have to say carrying value at the end minus additions should give you the carrying value at the beginning. And here it is here. It's very easy. I'll write it for you. Carrying value at the beginning minus additions gives you carrying value at the end. So that's it. 2 marks, easy. Next, we want to calculate total depreciation on vehicles at the year end. Okay, so let's see. What do we know about our vehicles? We want to calculate this amount B. We know that our vehicles at the beginning of the year cost us $350,000. Our carrying value at the beginning was $35,000. So right here, I don't know why I wrote this here because it's here. 350 minus 315 is 35,000. We bought another vehicle because it says we bought one vehicle on the 1st of September 2016. We have two vehicles. That means we had one here, we bought one, and now we have 2. And depreciation is 20% per annum on cost. It is very important to note that our carrying value is 35,000. Our depreciation here is very high. This is a high depreciation, accumulated depreciation. Remember that when you add your depreciation now, we cannot get a carrying value of our first vehicle of 0. We cannot get 0. It's not allowed. You cannot have a carrying value of 0. So when you calculate the new depreciation, you need to remember, hey, our carrying value is already very low. You need to make sure that your depreciation for this year is not, oh, I'm sorry, that's my alarm. We need to remember that our depreciation for this year cannot be lower than an amount of this, which would give us 0. Okay, so let me show you what I'm talking about. So let's calculate depreciation on the vehicle we have. So there was one vehicle we had for the whole year. Uh, Come on. Oh, it's here. So there was one vehicle we had all year, right? And that vehicle cost us 350,000. I think, let me double check. Yes, 350,000. And we know that our calculations are on cost, so that's easy. We multiply it by 20% and we get 70,000 Rand. But hey, remember I said that we cannot have a depreciation amount which is so high, because if we take 35,000 minus 70,000, we get a negative amount, and this is not good. This is not allowed. Our carrying value can never be 0 or below 0. So we're not going to even look at this. This amount here, the 70,000, we're not going to even look at it. We're going to say, hey, our depreciation cannot be 70,000. It cannot be an amount which would give us 0. It has to be 34,999. This way, if we say 35,000, which is our carrying value, minus this, we get 1. And we can have 1. 1 is okay, but 0 is not okay. Okay, so that's depreciation of the first vehicle that we always had. Now we have to calculate depreciation on the addition. And our addition cost 422,550. 422,550. We know that it's multiplied by cost. Don't forget that we bought this vehicle in September on the, where is it? On the 1st of September. Which means we are only calculating depreciation for 6 months, right? For September, October, November, December, Jan, and Feb. That's 6 months. So this is the depreciation on the new vehicle, and it should give you 42,255. To calculate the total depreciation on vehicles, we obviously have to add the two depreciation amounts we have. So let's see, we have 34,999 plus 42255, and that should give us an amount of 77,249. Okay guys, I hope you're all okay. Remember, you can always ask me questions. I get excited to answer you, and I'm gonna make a new video because, whoa, this one took a long time.